Welcome to The Explainer. Sometimes a picture is worth 1,000 words. Well, today we're letting two incredibly powerful charts do all the talking. They tell this fascinating story about wealth, risk, and what happens over time.
I mean, think about it. 40 years of market movement. It's kind of hard to really picture, right? But numbers get so huge, the lines on the charts get so steep, you can totally lose perspective. So that's what we're going to do today. We're just going to let the data speak for itself.
So, here they are. On one side, you've got the NASDAQ 100. That's the big one, the tech powerhouse. And on the other side, gold. The timeless classic asset that's been a store of value forever. Two completely different stories, and you can see it right there in the lines.
So let's break this down. We're going to look at the journey of both of these assets using only what's written right here on the charts themselves.
All right, let's get into it. To really get this story, you got to go back to the beginning. So where did it all kick off for tech and for gold?
Okay, first up, the NASDAQ 100. The little note on the chart is super clear. Back in 1985, the index just started. It had a baseline value of 100.
Yep, that's it. Just 100, a nice, clean, simple number. And that was the starting line for what turned into a global tech revolution. Kind of wild when you think about it, isn't it?
Okay, now let's jump over to gold. Around that same time, the chart points to 1973. A single ounce of gold was worth just $64. So here's the thing to remember. Both of these massive assets that entire investment strategies are built around, they both started from these, pretty humble beginnings. Okay, so that's the starting line. Now let's see what happens next. Because from that simple starting point of 100, the NASDAQ just took off. It became one of the most insane growth stories in modern finance. The return? Just look at that number at the top of the chart. It's over 18,000%. It's one of those numbers that's so big it's kind of hard to even process what it means.
So let's break it down into something that makes more sense. The chart actually helps us out here. It's a 260 times increase. Think about it this way. Every single dollar you put in back in '85 would be worth $260. Wow.
And you can literally see this story on the chart. I mean, just look at that curve, especially after 2009. The line basically goes straight up. That's the visual of a tech explosion. Now, this is where it gets really interesting when you compare them. Yeah, both had their big moments, right? The dot-com bubble for the NASDAQ, that big gold spike in 1980. But when you look at them side by side like this, it's just no contest. The recent growth in tech is on a whole other planet. The scale is just completely different. But okay, these charts aren't just looking backwards. Both of them have these hand-drawn lines on them, trying to guess what's next. So what are these little forecasts all about? So on the NASDAQ chart, you see this bright yellow line. It's labeled NDX linear. And what it's trying to do is just smooth out all the craziness, all the ups and downs, and draw one simple, straight line pointing up. The gold chart gets way more specific, though. Look at this annotation. It's pointing right at the year 2026 and says $5,200 an ounce. That's not just a trend line. That's a super specific target somebody drew right on there. Now, we gotta pause for a sec and talk about what this actually is. It's called a linear projection, and it's basically the simplest kind of forecast you can make. You just draw a straight line based on what already happened. It's not magic, it's not a guarantee, and it definitely can't predict, a pandemic or a huge economic crash. So, okay, we've looked at the past, we've looked at these little guesses about the future. What's the big picture here? What's the real story these two charts are telling us? And this really boils it all down, doesn't it? On one side, you've got the NASDAQ, delivering this mind-blowing 260x return, all fueled by pure innovation. Then on the other side, you've got gold. Its story isn't about explosive growth. It's more about holding on to value, especially when things get shaky, like back in the high inflation days of 1980. And of course, you knew this was coming, right? The classic disclaimer. Past performance is not indicative of future results. It's on everything for a reason. What happened over the last 40 years is just what happened. It's not a promise about what's going to happen next. So at the end of the day, these charts tell an amazing story about where we've been. You see the incredible power of technology and the steady hand of tradition. But where we're going from here? Well, that's the big question, isn't it? That's the question every single investor is trying to answer.